Okay, let's now welcome on board Ashwani Kumar, the MD and CEO at UCO Bank, to talk about how their numbers have been and what's the visibility going forward. Mr. Kumar, great to speak with you on ET Now. This quarter you've reported an improvement in your NIMs while others were clearly struggling to maintain them itself. What led to this kind of robustness in your business and the uptick that you've seen?
Good morning. Thank you for having me on the show. First, we worked on 3-4 strategies. One was to contain our cost of deposit. If you see, our cost of deposit during this quarter has come down over the previous year, though there is a challenge in maintaining the high cost of deposit. But we, as a team, worked together and brought down the cost of deposit by maintaining our CASA ratio to above 38%, and also by improving our yield on advances. And we did not go for the low yielding advances, and we repriced our low yielding advances as well. Earlier we had given. So and the entire team was working on ground for retail term deposit, and we reduced our reliance on the high cost of deposit at the bulk deposits.
What is happening on the liability front, considering that there seems to be a war of liability? Everybody wants that extra deposit, and there seems to be a war there.
Yeah, agreed. Because if you look at the deposit growth is not in line with the advances growth. Advances growth is far ahead of deposit growth. So every bank, and including our bank, is working on deposit franchise. We have 3,230 branches across India where we are targeting our CASA deposits. In order to gain momentum in CASA, we have launched various new initiatives, products also. We introduced TAP banking. 1,600 branches are opening accounts through TAP. We introduced new saving products. We introduced new current account products to garner the requirements of our female customers. We introduced Pink Basket. So a whole lot of initiatives are being taken by the team to make sure that our deposits grow. We have given a guidance of 8 to 10%. If you look at this quarter, our deposit growth was above 7%, as against previous quarter, our overall deposit growth was 5.53%. So the team is working hard to make sure that we attain the deposit growth which we have targeted.
I also wanted to understand what the outlook is on the retails and corporate when it comes to the NPA ratios, because there was a bit of an uptick this quarter. Are there any concerns on retail unsecured in the industry? Is there a risk of that building up in the book?
See, if you look at our slippage ratio in 22-23 was 1.70%. In last 23-24, it was 1.27%. We have given a guidance of slippage ratio of 1.25%, 1.25%, and the slippage this quarter was in 1.03% on an annualized basis. So slippages are under control. Slightly, in absolute amount, slippage was slightly higher than the previous quarter, but when we compare with the June 23 quarter, slippages were quite low on a YOY basis. With regard to the unsecured advances and NPA and unsecured advances, let me share with you, in UCO Bank we have a very small book of unsecured advances, that is around 1,700-1,800 crore only, and that is not even 1% of the total book, and that is again backed by salary accounts and pension accounts. So at UCO Bank we need not to worry about the unsecured book and the delinquencies in the unsecured book.
Right. And, RBI has also come out with that draft circular due to the rising concerns when it comes to liquidity. You have enough cushion with you. What is your internal assessment in terms of the impact of this on LCR?
See, currently we are maintaining LCR ratio well above the RBI guidelines, and we are continuously monitoring on a daily basis our LCR. With regard to these new guidelines, these are just draft guidelines. And once the final guidelines are there, then impact will be better known. Currently, we have worked, it may be around 10%, but once the draft guidelines are there, final guidelines are there, then exact calculation will be made.
And, given that SEBI as well has suggested the government's holdings now should be brought down to 75%, currently the government has about a 95% stake. I just want to understand any talks with officials, what your outlook is in terms of bringing down the growth. Do you have a timeline?
We have already taken board approval, and AGM approval has also been taken for raising for issuing 400 crore equity shares worth rupees 4,000 crore face value, and we have already written to the government of India seeking their approval. And as that once the approval is there, we'll come to the market at the opportune time for raising the capital. But let me also share with you, we have a capital adequacy ratio of more than 17%. Currently, we don't need capital for the purpose of our growth. So we need not to slow down our growth for want of capital. Our capital is sufficient enough. Our internal accruals during the quarter and for the full year will be sufficient enough to take care of our growth requirements. This capital raising will be only for the purpose of bringing down the government holding.
Right. You also have an approval for a fresh issue of up to about 4,000 crore rupees. You mentioned the first tranche will be about 2,000 crores, but that the bank has enough growth capital already. So tell me what the timeline's like and what's the plan like?
We are working. We have already floated RFP for onboarding the merchant bankers, and at the opportune time, maybe this quarter or next quarter, will come for the with the QIP.
Right, Mr. Kumar. Great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thank you. Thank you very much.
Okay, that's